Hi, everybody. Scott Riley with Market Update Desk and Mortgage One. Welcome to Monday, November 27th. We're through the Thanksgiving holiday. Got to spend some great time with family and friends, and hopefully you did also. Last week, we ended up the week on slightly in the positive range, which was fantastic. Anytime you go into a long holiday weekend, there is concern that the market will retreat a little bit and give up the gains that you got earlier in the week. But we ended up net positive for last week, which was great news. This week, again, full force ahead with a lot of information. Let's kind of dive into it. New home sales. So there were 439,000 new homes for sale at the end of October, which was a slight increase from the expectations of 433,000. At the current pace of sales, there supposedly is a 7.8 month supply, which is up from 7.2 months. I'm sorry, 7.2 months. However, only 76,000 of those homes were completed. And when looking at the pace of sales versus homes completed, the actual available inventory that's not under contract already is only a 1.3 month supply. Now, a lot of news popped out today, especially from our friend Diana Olick at CNBC, spouting off the decrease in median home prices. Now, as normal, she doesn't go into what really makes up median home prices and why that can be a very fluctuating number and not really tell the whole story. Now, keep in mind, median home price is not appreciation. There's a big difference. So the median home price was reported at 409,000, which was down 2.3% from the previous month and 10.6% year over year. But this can be very skewed with the mix of sales. And I'm going to put up a couple of charts after this on the pages here to explain what that mix of sales really means. So right now we have significantly more sales going on with the below 450 to 500 price point than above the 450 to 500 price point. So what that's doing when you have more units sold at a lower price, that's going to bring the median home price down because it's taking the middle of all those sales price of all those sales. So it's not giving a true appreciation. It's skewed based on the volume of what's being sold. And especially when rates topped out last month at 8%, 8.25%, you saw a decrease of what people were looking for. Now that rates have come down from their heights, we're seeing that skew back again to where they were. So we're likely going to see an increase in median home price next month. Now, of course, the media doesn't go into the depth of why that is and the explanation of it. They only put the big headline up there that draws eyes. So that's something that we're trying to educate people on. Now, interestingly, of the new home sales, 54% of those buyers were first-time home buyers, and that's likely because of lack of inventory that's out there. And builders are starting to build a more affordable home where more people can afford it. So we're seeing some of those prices skew just a little bit down. Now, this week, we do have a lot going on. Like I just said, today was new home sales. Tomorrow is a much more important number, home appreciation by Case-Shiller, HPI, FHFA, and HPI. Now, something tomorrow that is of very significance that we're going to watch is the 7-year bond auction. Previously, the 7-year auction has been less than stellar. So hopefully we get even a neutral rating on that 7-year bond auction. Wednesday is mortgage applications. Second look at Q3 GDP. And then Thursday, here's the big one, PCE, personal consumption expenditure. It's the Fed's favorite measure of inflation, and jobless claims. Friday wraps up with ISM manufacturing. Now, on the technical side, looks like we're up, mortgage-backed securities are up another 24 basis points today. The 10-year Treasury is down 3. Now we're at a very important point on the 10-year. We've come down substantially from where we were 3 weeks ago. Right now, we're standing on the 10-year at about 4.43. There's a very important technical level of resistance at 4.42. If we can close beneath that, we have some room to run to the next level of resistance, which is a very strong resistance level at 4.35. If we can get through both of those numbers, there is a big drop off to the next level of resistance. Now, later on this week, with PCE and our expectation of that coming in less than expected, there is the opportunity to get on this path to breaking through these resistance levels and give us even better mortgage rates. For buyers, what does that mean? Yeah, it means better interest rates and lower payments. Now, keep in mind, that also means more competition. So those buyers that are out there, we're helping get offers accepted and understanding that while rates may get better, second quarter next year, third quarter, can always refinance later. But the problem is if you wait to buy until then, your potential sales price could be significantly more because of the competition that's going to come off the streets and start looking at homes again. Give us a call. We can go in depth on explaining this, help get you approved. Scott Riley, 616-293-2189. Look forward to hearing from you and have a great day.